Vicky Pryce, international economist. She joins me now. Good to see you, Vicky. We always seem to be talking about bad news when it comes to the economy. The health of the banking sector in sharp focus, both sides of the Atlantic. Are we on the brink of another banking crisis?
Well, I would say that the regulators have learned what they need to do when there is a crisis like this, which is step in very, very quickly and give guarantees and ensure that nobody loses their deposits. And I think that's very important. This is the same thing that's happened here as well, with HSBC buying the subsidiary of Silicon Valley Bank for £1, but also guaranteed, if you like, with help from the regulators here too, and the deposit insurance scheme. All the deposits are there, which are, of course, those guarantees are considerably higher than what you normally expect from a bank. The rules suggest, certainly the US, that you are entitled to $250,000 being at least safe in a bank. We know full well that 90% of the deposits that were at SVB were in fact over that limit. Well, that's guaranteed for them. The question, of course, for everyone is, does that mean that if there is a problem, some of the other banks will have the same guarantees as well? Well, it remains to be seen. But at least they've stepped in quite quickly. And I think that's reassuring, or at least we thought it was reassuring. And then we got, of course, the Credit Suisse concerns, and it looks like an awful lot of money is being moving around in order to avoid perhaps being with Credit Suisse and also moving out of banks in some cases and into the bond market, which of course has been the reason why some of these issues have emerged in the first place, because bond prices have been falling as yields have been rising, and the value of anything, holdings of those, has been going down, causing problems for the banks. But right now what seems to be happening is that there is a move to safety, buying more bonds, and some of those yields are coming down. So maybe we'll see some of those problems ease in the future.
Maybe we will, but I wonder, with talk of the trading floor being Credit Suisse, with this string of scandals undermining investor confidence, what's going to happen next there?
It's a very good question. Of course, what we know is that Credit Suisse lost money in 21 and 22, as far as we understand it. And I think they had made a statement and in terms of expectations for profits, and they didn't think they were going to turn into profitability for another couple of years, so, or at least until next year. So that's an issue for them, which is, quite specific to them. It's not necessarily the case. We see the drops in share prices in other banks, but they are a very different establishment. Lots and lots of the retail or commercial banks seem to be doing okay, and a lot of funds have moved to them, it seems. And yet, of course, the contagion in terms of at least the impression of the market that perhaps there's something wrong there has spread definitely to other banks, and that's why we're seeing those share prices fall.
Vicky, the European Central Bank meets on Thursday. What would another big interest rate rise mean for euro area banks?
It would be a bit of a worry. Of course, banks do rather well when interest rates are higher. Those that collect deposits and then make loans generally do okay because they widen their spreads, so the margins improve and therefore profitability improves. That's the standard model that exists. On the other hand, what it will indicate, if there is a big increase, is that the central bank is still worried about inflation. If that is the case, then they will be influencing what happens in the bond market and the yields there as well, because obviously yields go higher if you think inflation is going to be higher. That, of course, will mean that there will still be problems. Loads of financial institutions are holders of bonds right now. So what they want is for those bonds to go up in price and the yields to come down. Well, if I think the central bank raises rates, then that might give a bit of instability. I think we're already hearing that in the US, perhaps the expected increase in a central bank rate Federal Reserve may be less than anticipated. And in fact, there were some rumors yesterday. The market expectation was that the next increase would in fact be 0. So we may not get that to happen. If that's the case, or at least that's conveyed already to the rest of the central banks, because there's a lot of coordination, well, at least they talk to each other, even though they compete against each other too, we may see the ECB reflect a little bit. But there is a concern. I remember back in the Eurozone crisis in 2011, the European Central Bank raised rates twice, not realizing that, in fact, the European economy was in recession, and one hopes they're not going to do the same again.
Vicky Pryce, thank you very much.